From a technical perspective, the gold USD, so far, has managed to defend and hold above the 200-day exponential moving average. The said support is currently pegged around the $1,907 area, which should now act as a pivotal point. This is followed by the $1,900 round figure, which if broken decisively will be seen as a fresh trigger for bearish traders and pave the way for further losses. The gold price might then accelerate the slide further below the June monthly swing low, around the $1,893 to $1,892 region, towards testing the next relevant support near the $1,870 horizontal zone en route to the $1,858 to $1,857 region. On the flip side, the $1,925 area is likely to act as an immediate hurdle ahead of the $1,934 to $1,935 region and the $1,942 supply zone. A sustained strength beyond the latter might trigger a short covering rally towards the $1,954 to $1,955 resistance en route to the $1,965 area. The latter coincides with the 100-day simple moving average, which if cleared will negate the negative outlook and shift the near-term bias in favor of bullish traders.